Well, this week we have confirmation of some pretty important data trends we've been monitoring for several weeks now, including some recorded inventory changes, but the data might not actually be pointing to good news for buyers and sellers. And that's what I'll be going over in today's market update. So let's get started. If this is your first time to this channel and you want to know everything about living, buying, and selling in Southwest Florida, then subscribe and tap the bell for notifications so you can be the first to know about the current market, latest news, and newest tips to keep you ahead of the curve. I'm Rick Harrison with the Home Sold Guaranteed Group at MVP Realty here in Southwest Florida, and my team and I are getting calls, emails, and texts every day from people just like you looking for help on making their move to the greater Fort Myers area, and we absolutely love it. Whether you're moving in 9 days or 90 days, give us a call, shoot us a text, send an email, or schedule a Zoom so we can help you figure out exactly what you want and where you want to be. All of our information is in the description below. So as I mentioned, we have some confirmations on data trends I've been covering for over a month now in this week's market update, but it may be pointing to some not so great news for buyers and sellers alike in the new year. And I'll explain what I mean at the end, but first let's dive into this week's local market changes, starting with the southern part of Southwest Florida. So from Cape Coral to Naples, we had new listings went from last week 448 to 912. That's up 103%. So we doubled the amount of inventory in just 1 week, which that right there is breaking the trend that we had seen over the last 2 to 3 weeks going into the holiday season. And that was something that I was a little bit worried about, but it looks like we're back on track. We're now actually starting to hit almost close to record highs again for new listings coming on in a single week, 7-day average. Solds went from 571 to 488. That's just down 15%. Again, lagging indicator, that's already stuff that's been under contract and is just closing now from the last 30 to 45 days. Pendings 450 to 666. That's up 48%. So again, this is showing you that there are more buyers starting to enter the market now. Everybody's starting to, mainstream has kind of the narrative that prices are coming down, sellers are, their homes are sitting on the market longer, and we're also seeing inventory increase. So with mortgage rates decreasing and inventory increasing, more buyers are entering the market, and pending is what's going on in the market right now. So we are seeing an increase there. Price decreases, we also did see that this is up 99% from week over week. Again, that's expected with everybody starting to, after the holiday season, people make their moves with whatever they're planning to do. Latest inventory. So single families up to 5292. That's a gain of 173 units this week, 7-day average. Condos week over week went to 2660. That's up 164. So we had a net loss of 43 last week, which was kind of, it wasn't a huge loss, but it was still a loss. This week, we're up 337 units in 7 days. So that's a pretty large increase, as you can see from the inventory increase. Multifamilies just up slightly, up 2 to 149. And then foreclosures, we did see a little bit of a tick up to 3. Still nothing to really, write home about. All right, moving on to the northern part, Punta Gorda. New listings, 841 up to 1456. Again, same thing. We're seeing new listings here, 73%. Not quite as much as the southern part of Southwest Florida, but is up significantly. So that's a good trend. Price decreases went from 891 to 2132. That's up 139%. So that's way up, and that's well above even the southern part of Southwest Florida. Solds down 32%, 1360 to 926. And pendings, which is what's going on right now in this market in northern part of Southwest Florida, 919 last week to 1365 this week. That's up 48%. So again, we are seeing more buyers entering the market and putting offers in. Latest inventory, we went up 151 to 4344 for single families. So that's 4,344 units, up 151. And then condos and everything else, 1890, that's up 59. So we had a net loss of 122 last week. We have a net gain of 210 this week. Multifamilies, just up 2 again, really the same as the other market, up to 61, and foreclosures ticked up 6. So that is up a little bit more than usual, but still not. We're not seeing anything crazy. That's not like we're seeing 20 new units come on in a single week. Interest rates down quite a bit from last week. We were at around the 6.5% range for both NerdWallet and Bankrate. Again, going from 6.5% last week to 6.1% for mortgage rates this week on average. And then even Bankrate went down slightly to 6.47. So all those are indicating that more buyers may start entering the market. So let's get right into, first, I want to show you the bond market. Let's take a look at the bonds right now. As you can see, these lines have been drawn for several weeks now, actually a little over a month now. I showed you the breakout here. It was supposed to go up here, touch the line, and we weren't sure last week whether or not this was going to be a confirmation of resistance or support. And we got confirmation finally this week over the past couple days. This did confirm as it was resistance, so it headed lower. And it looks like as of right now, it's still heading lower. So if you take a look at the MACD in the middle here, you can see that they did converge and diverge again. So now they're heading lower. It rolled over. And the same thing with the RSI, which is indicating it is looking like that is also rolling over too. So all indications right now are showing that mortgage rates will probably be heading lower for the next probably at least a week. But we don't know how long. I can't confirm any patterns yet. So there's no, I mean, it looks like it's another double top, which means it would probably keep heading lower. But there's no new patterns yet on this new line down, this leg down. So we'll have to keep an eye on that. All right, the first story I want to go over is from, actually the first two are from Redfin, but first, a record share of home sellers are giving concessions to buyers, money for repairs and mortgage rate buydowns, and a record 42% of home sales in the fourth quarter. So that's indicating that's up quite a bit from the third quarter, but in general, this is a brand new record. So that's indicating kind of the market we're in right now. It's softening quite a bit for sellers and buyers have a little bit more leverage. So just to give you an idea, this chart really shows you the perspective of where things have gone since June of 2022, where we kind of hit a low. It's just been increasing pretty steadily, a good 4 to 6% at a clip each month. So, based on this rate, we can expect to see almost half of homes next month getting concessions. So that's good indications for you buyers out there who are waiting. On the other hand, pending sales dropped to the lowest level since at least 2015. Again, we went over this last market update. We were worried about this going into the holidays and then coming out of the holiday season. However, these latest data, the latest data in our local market that I just went over is showing that that's probably going to reverse course. And this story is probably already out of date. Seasonally adjusted home buyer demand index was up 8% from 2 weeks earlier. So this is showing that the demand index for buyers is increasing again. 8% in 2 weeks is a pretty good increase. The two categories of buyers that are starting their search right now: first timers hoping prices and competition are more manageable than they have been over the last few years, which they are right now. So that's what I've been kind of telling everybody on this channel. If you're a buyer, it's not a bad time right now. There's not a whole lot of buyers yet in the market. Prices are coming down. Concessions are there for you. So, keep those things in mind. And the other category is returning buyers who took a break after losing out on multiple homes during the bidding war frenzy. One of the other stories I wanted to go over, this is from the Florida Association of Realtors. The East will be a seller's market. So the East Coast, really. It'll usher in a more balanced housing market. However, home shoppers will find different scenarios depending on where in the U.S. they are looking. So you got to be hyper local about the markets. You can't listen to a channel that's telling you, oh, prices are falling across the United States. That's not going to be the case in 2023. You have to get really hyper local. Go to those channels that are specific to what market they're actually recording the data for and going over the stats for. Specifically for Florida, metros in the top 25 for a seller's market. Tampa, St. Petersburg, and Clearwater, sales are down 5.5%, but prices are up 9.9%. So that, those two things go hand in hand. Number 20, Deltona, Daytona, and Ormond Beach, sales down 6.9%, prices up 3.3%. Orlando, Kissimmee, Sanford, sales down 7.6%, prices up 6.7%. And then Jacksonville, sales are down 7.6%, prices are up 1.4%. So those four markets they're still in a seller's market and prices are still going up right now. Home sales across the top sellers markets are forecast to rise by between 5% to 18% over the next 12 months. So some of these markets are still going to be seeing increases according to this report. The median homes prices in these markets is expected to increase 8.3%, whereas I believe average nationally they are seeing a negative. Get hyperlocal. Look at those agents and those YouTube channels that are giving you data specifically for their markets, not overall. I know a lot of these big YouTubers have these really huge huge followings, but honestly, they're giving you average numbers throughout the whole thing, and they're not really giving you and diving into specific local market data. So buyers, these new trends suggest that even though interest rates are coming down, we don't have confirmation of a new technical analysis pattern yet for the bond market. So this means it could reverse course at any point, but for now is set to continue falling, which means lower rates. And as I've discussed in several updates over the past couple months, lower rates means more demand and more buyers entering the market. If this trend continues, the competition could start to get tough again. So for some, we may be in a sweet spot for buying with rates falling, prices falling, the ability to ask for concessions, and fewer buyers in the market. How tough the competition could get will really depend a lot on the economy, the rates, and inventory. But the National Association of Realtors is calling for steady price appreciation in a number of Florida markets, and many lenders are seeing rates continue to fall or flatline. And of course, always take projections and data with a grain of salt, especially from entrenched sources. After all, the realtor associations are in the business of promoting the buying and selling of real estate. And before I forget, if you recognize a pattern forming in the bond market that I'm just not seeing, please let me and the rest of the viewers know in the comments section. Now for you sellers, in the short term, you're probably going to be dealing with a tougher and more scrutinous buyer who is willing to wait. So depending on your need to sell, you may need to play ball and offer some incentives of some sort. Paying closing costs, making repairs, buying down buyer rates are all options. But for those of you in some of the higher demand communities and markets, you may not need to do any of these things. Just make sure your agent is an expert in your community or market and knows it well. Well, that about covers it for this week's market update. If you got value out of today's video, please hit that like button to let me know. And don't forget to subscribe so you're the first to be notified of the latest data, tips, and happenings in our market. And again, please don't hesitate to reach out for help or questions, as many of you do. Our contact information is in the description below. I hope to see you again next week, but until then, stay safe, stay positive, and more importantly, stay free.